$5,000. I've been staring at that ticker all morning, and it just keeps blinking at me. Monday, January 26th, 2026. This is going to be one of those dates people remember, isn't it?
It really is.
Yeah.
I mean, gold just smashed through $5,000 an ounce.
It's a staggering number. I remember when analysts were saying 3,000 was, the moon.
Right. 5,000 feels less like a milestone and more like a siren going off.
That's the perfect word for it, a siren. Because you don't buy gold at $5,000 because you're feeling optimistic.
No.
You buy it because you're terrified of everything else. It feels like the financial equivalent of, I don't know, hoarding canned beans.
It's the ultimate flight to safety. And when you look at the whole picture today, the weather, the power grid, the civil unrest, investors are looking at the world map and just struggling to find a safe harbor. So they're digging into the ground.
And it's not just the investors. We've got a massive winter storm. Winter storm Fern, literally freezing the power grid. We've got CEOs writing open letters about riots in Minnesota, and then we have the government basically nationalizing mining operations. It feels like the very definition of stability is being rewritten today.
That is the core theme for this deep dive. Volatility isn't just a market term anymore. It's the operating system for 2026. We were seeing a complete reshuffling of how the world works.
From the macro level all the way down to the micro.
Exactly. From central banks down to, like, how you pick a seat on an airplane.
Okay, so let's start with the money, because that gold signal is deafening. Goldman Sachs updated their forecast, and they didn't really mince words.
No, they didn't. They blamed global policy uncertainty.
Which is just a very polite way of saying nobody knows what the rules are anymore.
Precisely. And when a firm like Goldman cites policy uncertainty, they're talking about an erosion of trust. Usually, when the world gets scary, money flows into the U.S. dollar. It's the bedrock.
It's the reserve currency.
Right. But with gold spiking this hard, the market is telling you that the dollar isn't the fortress it used to be.
And we actually saw proof of that fear this morning. The New York Fed did something incredibly rare.
A rate check.
A rate check on the dollar-yen exchange rate. Now, for people who don't spend their lives glued to a Bloomberg terminal, a rate check sounds pretty casual. But it's not, is it?
Far from it. A rate check is the financial equivalent of a mob boss walking into a shop, looking around and saying, "Nice place you got here."
Wow.
It's an implicit threat. The Fed calls up the major banks to ask for the price, not because they don't know it, but to signal that they are watching, that they are ready to intervene.
It's a warning shot.
It is. And the market reacted immediately. The dollar dropped sharply just on the news of the phone calls. But here's the real kicker. UBS put out a note suggesting that all this volatility means the U.S. is losing some of its reserve currency safety support.
That is a massive structural shift.
Huge. If the world stops believing the dollar is the absolute safest asset, the cost of everything changes for you.
Which, okay, that explains the gold rush. If paper money feels shaky, you want hard assets. But speaking of hard assets and shaking foundations, the physical infrastructure of the U.S. is having a really bad week.
Winter storm, Fern.
Yeah, we have to talk about it.
This is a brutal reminder of physical reality. PJM, that's the grid operator for a huge chunk of the East Coast, is under immense strain. We aren't just talking about a few power lines down.
No, we're talking about the economics of the grid literally breaking. I saw the numbers for Dominion Energy's territory in Virginia. Real-time power prices spiked over $1,800 per megawatt hour.
$1,800, that is crisis pricing.
It's desperation.
It is. At that price, you're signaling that there simply isn't enough juice to go around. And it got so bad that the Department of Energy had to issue an emergency order. They're authorizing power plants to exceed their emission limits.
Which is just fascinating, right? We have all these treaties and corporate ESG goals about cutting carbon, but the second the heater might stop working, the government just says, burn whatever you have to burn.
Necessity always overrides policy, every single time. When the grid is on the verge of collapse, environmental standards become a luxury.
And that chaos on the grid is just mirroring the chaos in the sky. Transportation Secretary Sean Duffy is out there claiming we'll see normalcy by Wednesday, but if you're at an airport today...
Normal is the last word you'd use.
Exactly. Thousands of flights canceled. American Airlines is waiving change fees, which is nice, I guess, but it doesn't get you home. It just adds to this feeling of fragility. The money is weird, the lights are flickering, the planes aren't flying.
And then you look at what's happening in Minnesota, and you realize the social fabric is fraying too.
Yeah, that situation is incredibly grave. And what stands out to me is who is sounding the alarm.
Right. It's not the politicians leading the charge here, it's the CEOs.
You saw that joint letter from the heads of Target, Best Buy, United Health, 3M, General Mills. I mean, these are the titans of industry. And they aren't just saying violence is bad.
No, they're practically begging for de-escalation after those federal agent shootings in Minneapolis. They're desperate, and they're desperate because of the data. They reported sales drops of up to 80% in those areas.
80%. Just think about that. That isn't a recession. That's a complete cessation of commerce.
You cannot run a business when the streets are a conflict zone. It ceases to be a functional economy.
And for Target and Best Buy, they have physical stores. They are part of the landscape. If people are too afraid to go outside, their entire business model just evaporates.
But then you look over at Silicon Valley.
And it's crickets.
The silence from big tech is deafening, isn't it? Apple's CEO hasn't said a word publicly, even with his own employees organizing and demanding the company pressure the White House on ICE operations.
It really highlights that divide between the cloud economy and the brick-and-mortar economy.
Absolutely. Apple sells iPhones, whether or not people in Minneapolis can walk to a Target. They can afford to wait it out. Target is fighting for survival. Tech is fighting for engagement.
A completely different world.
And while they're quiet about the streets, they're about to get very loud on Wall Street. We are walking into the Super Bowl of earnings weeks.
Oh, it's huge. We have Tesla, Microsoft, Meta on Wednesday, then Apple on Thursday. But the mood feels different this time.
Yeah.
For the last 2 years, all you had to do was say AI and your stock would go up. Now it feels like investors are crossing their arms and asking, okay, where's the profit?
The honeymoon is officially over. We are now in the show me the money phase of the AI boom. These companies have spent hundreds of billions on CapEx building data centers, buying chips.
And now the shareholders want to see the payoff. They want to know if this is actually making money or just, burning cash.
Everyone except for NVIDIA, it seems. NVIDIA seems to be operating in a completely different reality.
They really are. While everyone else is worrying about margins, NVIDIA is just building an empire.
It's fascinating. They aren't just selling the shovels for the gold rush anymore. They are buying the land. We saw they just invested $2 billion into CoreWeave.
$2 billion. And they brought shares at over $87 a pop.
And the scale of what they're trying to build is it's mind-boggling. They want to add 5 gigawatts of AI data center capacity by 2030.
5 gigawatts. We were just talking about the grid barely holding together in Virginia, and NVIDIA is planning to plug in a power load that's equivalent to millions of homes.
It's a collision course. You have the AI industry demanding exponential power growth, and you have a physical grid that is spiking to $1,800 a megawatt hour, just trying to keep people warm.
Something has to give.
But NVIDIA is betting that the demand for their new Rubin architecture and their Vera CPUs will be so high, the world will just have to find the power.
It's an arms race. But here's the disconnect that really gets me. You have these billions being poured into AI supercomputers, but then you look at the actual job market for regular people, and it is a mess.
Oh, it's brutal. The sources call it challenging, but dysfunctional feels more accurate.
It's the ghost job phenomena. Have you seen this?
I have. Companies leave job listings up for months with zero intention of ever filling them, just to harvest resumes or to look like they're growing. It's
gaslighting the entire workforce.
Yeah.
And the skills they want are shifting so fast. It's not just know Excel anymore. It's know how to use AI inside Excel to do the work of 3 people.
That is the key. Employers are prioritizing what some people are calling Microsoft-adjacent capabilities. It's the deep integration with AI tools. If you're a mid-level manager who can't leverage these tools, you're becoming obsolete.
The capital's going to the machines, not the headcount.
Exactly. And yet, for as powerful as these tools are, the tech giants are getting hammered legally for how they work.
Yeah.
We saw Alphabet Google just agreed to a $68 million settlement.
Right, over the Google Assistant false triggers.
Which is a terrifying concept. You don't say, hey, Google, but it records you anyway.
They deny doing anything wrong, of course, but $68 million is a pretty big check for we didn't do it.
It is. And it's not just privacy. It's the mental health side of it. That bellwether trial starting in LA against Meta and YouTube about addictive design, that's monumental.
A huge deal. If the courts decide these algorithms are designed to be harmful to teenagers, that opens the floodgates for liability.
And the EU is opening a whole other front against X, formerly Twitter. They're probing the Grok AI for generating sexualized images, including of minors. And this is where it gets really dangerous for Elon Musk.
Because it's not just about the content.
No. Visa and MasterCard are getting dragged into the scrutiny, and that is the choke point.
We've seen this before.
We have. Regulators know they can't always control the tech itself, but they can control the money. If Visa and MasterCard stop processing payments for X because of this pressure, the platform is basically dead in the water.
It's a squeeze play. Speaking of squeeze plays, let's talk about the one happening in economy class. Southwest Airlines.
Ah, the end of an era.
I honestly feel a little sad about this one. Southwest is officially ending open seating.
The cattle call is dead.
It's dead. They're bringing in assigned seats, paid preferred options, extra legroom for a price.
You have to look at the economics. That egalitarian model of flying, where a CEO and a student had the same shot at the exit row, it just doesn't maximize revenue. Southwest resisted for decades, but in 2026, efficiency and monetization win every time.
They're just becoming another legacy carrier. They're even changing the customer of size policy to require buying an extra seat in advance.
It's all about squeezing every last dime out of that cabin.
It really feels like we're losing the last quirky, human-centric big business.
It's all about consolidation and homogenization. That's the trend. I mean, look at the media landscape. We just got this massive update on the Netflix and Warner Bros. Discovery merger.
Right, the Netflix mega merger. It's now an all-cash deal. What was it, $27.75 a share for WBD?
Cash is king. They're doing that to speed it up because they need the scale. In a world where your attention is so fractured, owning the biggest library of content is the only defense.
Go big or get eaten.
It's the same logic as NVIDIA building massive data centers. And while these giants are merging, there's a hidden war happening in our wallets that most of us don't even see.
The swipe fee battle. This is bizarre. Merchant groups are trying to attach the Credit Card Competition Act to a crypto bill.
Only in Washington, right? It's the legislative equivalent of Frankenstein's monster.
It really is.
You have merchants who hate paying Visa and MasterCard fees. You have crypto bros who want clear regulations. So they're teaming up to try and break the duopoly of the credit card networks.
It's amazing. The White House is backing it, and Visa and MasterCard are fighting for their lives. It's a reminder that even the way you pay for things is under attack. And if you don't like the big platforms, the audience is proving they'll just move.
You're talking about Skylight.
Yeah. Have you seen this? 380,000 users practically overnight.
Because TikTok is struggling, they're having outages, that Oracle infrastructure is glitchy, and boom, users are gone. It shows that loyalty is non-existent. If the tech breaks, the people leave.
Which brings us back around to the biggest player of all stepping into the market. We've talked about corporations, but the most aggressive actor today might actually be the U.S. government.
This is the part of the deep dive that really blew my mind.
Right.
We usually think of the government as the referee.
Right. But today, they put on a jersey and started throwing elbows.
That's a great way to put it. Look at what the Treasury Department did to Booz Allen Hamilton. Canceled 31 contracts, worth about $21 million, all because of a leak by an ex-employee.
And Booz Allen stock dropped over 8% instantly. This was not a slap on the wrist.
No, this was a public execution. The government is sending a message to every single defense contractor. If you can't keep our secrets, we will destroy your stock price. It's a ruthless use of market power to enforce security.
But if canceling contracts is using the stick, the Commerce Department is breaking out a massive carrot. Or maybe they're just buying the whole farm.
They are taking an equity stake in USA Rare Earth. This might be the most significant signal of the day, in my opinion.
The U.S. government is taking an ownership stake, 8 to 16% in a mining company, and giving them a $1 billion loan.
We are effectively nationalizing the supply chain for critical minerals.
We are. We've realized that lithium, cobalt, all these rare earths, they're the oil of the 21st century.
Yeah.
And we can't rely on China, and apparently we can't rely on the free market to build these mines fast enough.
So the government is stepping in as a venture capitalist. It's state capitalism. It's the government saying, this is too important to fail, so we are going to own a piece of it.
And that blurs the lines completely, doesn't it?
It erases them.
And that's what I want to leave everyone thinking about today, because when you step back and look at the whole board, the roles are flipping upside down.
They are. Think about it. You have the CEOs of Target and Best Buy writing letters to the government about civil order. They're essentially doing the job of politicians.
Right.
And on the flip side, you have the Commerce Department buying shares in mines and the Treasury canceling business contracts like a disgruntled customer. They're acting like a corporation.
It's a total role reversal, and it just begs the question, who is actually accountable to you, the public?
Right. If the government is a shareholder, Are they looking out for the taxpayer or for the share price?
Mm-hmm.
And if a CEO is focused on social unrest, are they serving the citizen or the customer?
The traditional divide between the public sector and the private sector feels like it's gone. It's just one big, messy, volatile power struggle.
And in 2026, we're all just trying to figure out the new rules of the game.
Keep your head on a swivel, watch that gold price, hope the lights stay on, and maybe buy a warm coat just in case. Thanks for diving deep with us today.
Stay safe out there.